Hello, hello, hello. What's going on, everybody? Welcome to Stock Trades. Let's go ahead and lower this desk a little bit so the mic is here. Okay, so, wasn't going to make a live today, but, yesterday's live was pretty quick. So I wanted to go over a couple things, do some analysis, and kind of explain to you, my thoughts. I'm incredibly bullish. There's folks that are like, well, what's going on? And I'm going to explain why, right? Sometimes there's a lot of noise and you have to remove the noise and extract signal, right? So that's kind of where I'm standing. So I'm going to explain kind of my thoughts, and this is going to be a very technical live. It's going to be pretty technical. But before we even start, let me just go to the comment sections. Hey guys, I appreciate you commenting. Appreciate all you guys. What does DSL stand for? Can you help me? I think of like internet. Finally made an account so I could like and subscribe to YouTube. Help. Oh yeah, I appreciate you, Amanda. You're always on the Twitter, right? Thanks, man. Obviously, you're in our lifetime X as well, but that's how I see you a lot on Twitter. Let's see here. Yep. I'm so sorry, guys. Yeah, I know. I just had to, emails and bullshit and all this other stuff that I, came up. It always comes up during the lives. I would like to send you some fine, dude. Hell yeah, dude. Yeah, Al at alstocktrades.com. I love chocolate. You see, you know what? Everyone's like, oh, I want to get you gifts. I want to guys. The only thing I accept is chocolate. Okay. I love chocolate. I'll take chocolate. I love chocolate. Right. Okay. So yeah, email me at yeah, man, when it comes to chocolate, you know what I mean? And then put your return address, and then I'll send you some chocolate. I'll send you some Dubai chocolate, right? So we can have like a chocolate exchange. No. I'm not in Tucson now, so I'll give you like one of Michelle's dad's properties, because that's what I'm staying at right now, and I'll just like go from there. Just like one of those properties, yeah. And because I'll be in Phoenix, yeah. And then yeah, here's my email. Then I'll send you some chocolate too. We'll have a little chocolate exchange. Okay, so let's go ahead and let's talk about some stuff. All right, so there's been a lot of circulating chatter regarding SaaS and other income. We're gonna go ahead and talk about that, but like, I just want to just give you kind of if this is the first time you are hearing about this, then you've done a very terrible job, right? Of like understanding the company, right? Let me give you an example, okay? So here's Belize, one of our members within the mastering, Al Stock Trades. This was November 8th, 2024. I mean, look, guys, this is November 8th, 2024. That was literally a year ago, right? And we were basically talking about Clover Health has not received any revenue for Counterpart Health, other income to mean clinical services. How do you read this, right? We were like, we were discussing other income back then, right? And then, fast forward, March 11th, we were basically highlighting the other income section in regards to, what other income was. It's a screenshot I can click on. I wish I can click on this right now and I can show you the exact, honestly, I feel like that would probably be helpful instead of just showing you this. So let me hold on. Sometimes you just I gotta go back. When was this? This was March. Hold on, let me see if I can find the damn thing. It's like, have you seen them, as I'm looking and scrolling through this, have you seen like Sydney Sweeney in the elevator on Twitter? Yeah, B-Rob, I don't know if you checked it out, but just wanted to let you know. I think I sent this early in the morning, I remember, before the flurry of emails showed up in my inbox and the Zoom meetings and all of the stuff that I had to do. My Lord. There it is. I found it. Okay, here it is. So here's the exact message, so you guys know. What? Hold on. I like accidentally clicked on the wrong. Let me see if I can find it. Oh my God. I hate my life sometimes. Let me see. Sorry about that, guys. Oh, gotta find it right now. Found it. All right. All right. Here it is. So here's the original post. And if you could click on this, um, we're talking about other income, right? And it hasn't really changed, 26 million throughout the year. And then you have this here, um, revenue from our counterpart health SaaS and tech enabled services is included within other income on our consolidated statements of operations and comprehensive loss. So you could see we already knew about this and back in March 11th, 2025. So a lot of people are basically catching on now. And again, that just shows you even the people that are retail investors that are holders of Clover Health, especially the ones that are very vocal out there, they themselves have not seen this, right? Because they have not analyzed every single line of every little minuscule period of everything that Clover Health has sent. Now I have a lot. I have a million invested in Clover, right? So of course I'm going to read every freaking line, right? And of course Dish is going to read every line. So we already knew this, right? And so we were monitoring it. It's not as impactful now, but I am watching it, right? So we're going to talk about it right now. But I just wanted to show you and let you know, May 6th, 2025, we were looking at other income. It was only 5 mil, right? Here it is. And, June 9th, right? A couple months ago, we were talking about it, right? So I just wanted to just take some time to talk about this, okay? And since we're on the talk of other income, let's just go ahead and look at it right now. So as you can see, last year they had about 8.4 million, and then this year is about 17.5 million. So I don't know what is counterpart, what is not within that 17 mil. But what we can say is last year, let's assume there's no counterpart. So we could let's just take 17 minus 18. Sorry, 17 minus 8. That's about $9 million on average. So about 9 million could be counterpart. Now, if you look at open evidence, it's currently trading at a price to sales of 122. So if this was the private market, then you could take 9 times 122. That's about $1 billion of market cap, right? Which technically would be an addition of $2.19 to the stock. So let's say Clover is worth $2.50. It's not, but let's just say that's about $4.69, right? So, and that's with just $9 million of net income, assuming the price to sales of the private markets, which is like totally an unprofessional way of looking at things, because that's the private market, right? But it's the growth potential, right? Right. That's why I follow you, Al. No, again, and I'm glad that you guys do, because you guys see everything we do is data driven. It's very surgical. There's no emotion, right? You guys are gonna laugh, but hold on, because it is kind of getting a little hot. Michelle, can you lower the AC? I'm serious. I'm sorry. It's a little hot. Can you lower the AC? And I'm not saying that as a joke. It's freaking hot, right? Sorry. Okay. Maybe I should move to New York. Oh, yeah. Thank you. Appreciate you. Oh, Mondani. Yeah, I moved to New York. Oh, yeah. It's hot. It's pretty cold there now. Okay, so also congratulations to Mondani, right? Obviously, you guys know I'm an independent and I love change. So it's not like America's going to be over, right? I love new faces. He has a beautiful, charismatic smile. So congratulations, Mamdani. Can't wait to see what you guys do, right? And I was able to see my AOC yesterday on TV, so I got very I got very excited. Michelle's looking at me, man. If I can screenshot her face. Huh? She's about to raise the AC, she said. Oh, yeah. Yeah, it is kind of getting a little hot in here. Oh, okay, I'm kidding. I'm kidding. All right, so now let's get back to the business here. Okay, so yeah, so let's oh, there's a message. I'll look at it after here. So we'll talk about this, right? We will talk about this. The big thing that I want to mention right now is we're going to do some math. Okay, so let's go all the way up, and let's just kind of read this line by line, and let's just see, just to kind of catch everyone up to speed. Okay. So generate third quarter. Honestly, guys, you guys can read this. I mean, why am I going to do something that I'm just going to, let's look at the financial results because all this is fluff to me. Okay. So 2025 Medicare Advantage grew 35%. The quarterly revenue is now 497 million for Q3. It grew 50%. That's pretty wild. And that's MA. That is MA. That's really good. All right. Third quarter 2025 profitability metrics, GAAP net loss of negative 24 million. And adjusted EBITDA of 2 million and net income of 2 million. So that's not bad, right? With this crazy growth. But the question, right? So I'll give you the questions that I have, right? So the third quarter year to date GAAP net loss is 36 million. The adjusted EBITDA is 45 million. But yet, listen, guys, they went ahead and expect the adjusted EBITDA profitability and net income to be anywhere between 15 to 30 million. That's pretty much of a big range, but it shows you that they're at 45 million now. So what does that basically mean? That means EBITDA is actually going to be negative, I think, in Q4. So I think next year's quarterly revenue is going to be bad. It's going to be bad. And we knew it was going to be bad in Q2. If you don't recall, go look at not this yesterday's earnings, go look at 3 months ago where I made the video about the earnings. And I said, this is going to be shit. Okay. Which is, again, I'll explain to you kind of why I'm okay with that, right? And I have $1 million in Clover. Like, why am I okay with that? I have $1 million in this company, right? Why am I okay with this, right? A little over $1 million, actually, right? More. So why? So why am I okay? So I will explain this, and it has to deal with stress testing the business model. So, but you would have to look under the hood to actually see that it's not really that stressed. So if we go ahead and if we scroll down, so a lot of people are going to look at this. They're going to say revenue. Okay, fine. It's up. Total revenue. Okay, up for the quarter. And then they're going to see it's up. They're going to say, okay, SG&A expenses. Okay. Well, that's weird. SG&A expenses went down. That's actually pretty good. That's a savings. Net loss, they're going to see an increase. They're going to say, why this is what they're going to do. Okay. They're going to go ahead and they're going to look at the total revenue increase and they're going to look at the net loss and they're going to say, this is a terrible business. This business sucks, right? But you have to look under the hood here. Okay. You have to look deeper. So I'm going to explain kind of the situation here. Okay. So overall, the insurance BER went up by 1,000 basis points, right? But what about the what is the MCR, right? The issue right now is the insurance BER is at 93%. Now, a lot of people are going to basically say, oh my God, this is what I've heard, right? Oh my God. Like, here it is, ACO, they went up to 90% and they left. But, now look at their Medicare Advantage business. Their BER is 90%. Oh my God. You see, people are confusing BER versus MCR. They think that MCR is over 90%. No, you're stupid. You are stupid if you think that, right? Do you even know how to calculate MCR? Well, guess what, guys? We're going to go ahead and we're going to calculate it right now, okay? We're going to calculate this right now. We're going back to elementary school, okay? When I say you're stupid, that's how I teach, right? Sometimes I even talk to Michelle that way. I mean, I'm just kidding. No, I don't. No, I talk to myself, but like I'm teaching you. This is how I teach, okay? Right? This is no like woke university. This is like legit how I teach you guys, okay? Right? Because you can't talk like this in our academic settings But like, look at the beautiful education that they're being, look at the beautiful things that they're creating. Nothing, right? I'm going to teach you this so you can do it yourself, okay? Because again, that is not the point, right? So, okay. So now that we kind of went to this, let's go ahead now and before we do that, you can see that SG&A actually went down. We were always talking SG&A expenses need to go down. SG&A needs to go down. Well, guess what? It's going down. Okay. Now, adjusted EBITDA net income, that obviously took a hit. But why is it taking a hit? We're going to talk about that, right? Now, here are the things that I like. Favorable impact, 4-star payment next year. Cohort strong management and focus on returning member retention, which is going to be a 700 basis point reduction. If you don't know what that means, I'm going to explain. Favorable 2026 CMS final rate update. That's 9% that they're going to get, right? That's pretty much like that's like 1.5 star almost, like 1.75 of a star increase just from that rate notice. Part D direct subsidies that actually is going to be increased. Thank you to the administration, right? And the continued impact from cost efficiencies and incentives to optimize variable, fixed, and growth SG&A and all the other stock-based compensation. Okay, so we're going to include all this in this. We're going to include all this in the variable modeling, right? But BER went up, right? It's above 90% now, right? So the question is like, wait, what? BER is up now. What are we going to do, right? And we're going to go ahead and talk about this, right? So to do that, and there's also a meeting here in UBS on November 11th, which is about 6 days. So now let's go to the information here. So this is the information. We're going to take the numbers from here and we're going to go put them in the Excel spreadsheet here. Okay. Now, before we do that, let's just go ahead and look at the technical analysis. So as you can see, guys, every time the stock gets to its below RSI of below 30, it's a wonderful buying opportunity. You see here, it was oversold. You had a great buying opportunity. Then there's a rebound. Same thing here, oversold, and then there's a slow rebound, right? Now we'll see if we're able to fight through that 200-day Sybil moving average off of the hour chart. But overall, what I find interesting is, the last time, it was oversold like this was here back in May. And then it was free falling. And you see this little drop. I call this manipulation. Okay. I call this shorting a stock, right? Because it doesn't make sense. RSI is going up, but then all of a sudden the stock price is going. This doesn't make sense. Okay. And this is, I believe, where institutions really started buying a lot. And then fast forward, we see that now institutional ownership is over 40%. So as the float starts to decrease, it's almost like that game. What is that game? Let me give you kind of a visual, okay? So what's that alligator game with, at Peter Piper Pizza or Chuck E. Cheese where you kind of hit it and there's like a bunch of balls and there's like 3-4 alligators with different colors and you keep hitting it to just basically get the balls and you're like playing as an alligator. You keep hitting it and you want to get as many balls as you can. What is that game called? Please go ahead and give me an answer in one sentence. I'm asking ChatGPT because I don't know. I don't know the answer. So let me just, because it's a nice visual. Oh, it's called Whack-A-Gator. Okay, I think that's, I guess we'll see. Oh, it's called Hungry Hippos. Yeah, exactly. Yeah, stupid AI. Yeah, exactly. Yeah, it's called Hungry Hippos. I agree with you guys. Thanks, guys. Yeah, what's a Whack-A-Gator? Yeah, this is the game. Okay, good. So, in the beginning, now we're getting to a point where everyone's fighting for shares, and it's going to get to a point where there's not going to be a lot of balls left in the float. So people are going to press really hard to get those balls. And let's see that, okay? So, we're basically taking this back to elementary school days here, right? I love this game, right? So, let's say, those are retail investors. These are institutional investors. This is like Vivek. This is Vivek every time the stock drops, like, right? This comes in and We just keep basically eating until one time, until you're gonna get to a point where there's no more balls left, right? So, anywho, I hope that my kids play. Right? So, it's awesome, right? That's like our game, our like uh childhood, right? Um, so that's kind of just giving an example of how I look at this, in terms of the flow, right? So so with that, now you're starting to see a technically analysis response. I said fundamentally responsive chart. Now you're starting to see a technically responsive chart. Whatever time you get below RSI, it's just a great time to get in. And I see it, right? I see it. It shows you that these institutions are really coming in. I mean, look at this right here, right? High volume coming in with these sellings. And this is corroborated by retail, right? So if we were to go in right now and look at retail investors. Here, there it is. If we were to go to retail investors, just look at these comments. People are saying Andrew Toy needs to step down as CEO and contribute to the technical aspects of how people are saying that. People saying I'm just here for the comments. Yeah, shout out to Chris. He's one of our lifetime access members. Everyone wants a quick dopamine hit. Yeah, exactly, right? Even Belize is upset. It's like, what's going on with SAS? Crickets, right? But there's like a lot of like just crazy comments in here, right? Not sure why you guys IPO. You obviously do not care about shareholders. I mean, this guy is just having an emotional breakdown, just like a panic attack, right? Still waiting, and just the comment, F you. Oh my God. They're saying F you, and the people are liking it. Oh my God, he's like a piece. So he's saying Andrew Toy is a piece of poo poo. That's like people are. I do not believe that, but like, look at that, right? Just like do you see that? Like everyone just like so much emotions, right? Vivek, you mother effer. I hope you. Oh my God, he wants them to rock. Who the hell is this guy? What's happening? Honestly, man, you tell me, man. What the hell's happening, man? What's going on? Right? Holy moly. You'll have to do better. This guy is like a grandpa. You all have to do better. Just like, what this guy what's going on here? You got clown show here. What in the world? What is this? Stock twits? This is all at the company. This is under the company's tweet. Oh wow, so much negativity and not a one of you complaining about the lack of engagement bothered to engage in the QA. I believe you, Andrew. You know what's so sad? The one positive comment, and then Twitter labels it as spam. Like literally, the one positive. I'm gonna like this one. The one positive comment, and Twitter like probably spam, right? Because it's like Twitter is like no. Like it's very clear that everyone's mad at this company. So any positive comments is obviously a spam. Like that's like Clover trying to pump their stuff, right? And that's it. JP's like, that's me, right? So anywho, whenever you get to a point where again, this is the guys, listen, guys, oh my God, guys, listen, guys. This is the like exactly. Hungry hippos. Thank you. Right. He's probably watching the live late. Right. Okay. So think about this. The psychology of the market is I'm a spam bot, right? Imagine, right? I think it's a spam bot because you spoke positive. The psychology of the market is fascinating. If you watch the psychology of the market, it is so beautiful. These people are literally freaking out. They're like, bah! They're like freaking out. It is insane. And they are the reason why they are poor. They themselves look at themselves in the mirror. You are the reason why you're poor. It's your mindset. Your mindset is crap. It's a crap mindset. It's like a Windows 95 computer that's just dusty and smells rotten, right? Just a effed up mind, just like the ventricles are so huge. There's like no cortical mass. There's like literally defacement of the cortical membrane, probably some midline shift, and just complete rotted brain, literally, right? Just no thinking, okay? So let me explain to you now from someone like myself on why I'm bullish, right? Exactly. Hey, Jeffrey said it, right? Be greedy when others are fearful, and that's what's happening, honestly. I mean, somebody literally said institutional ownership doesn't matter. Are you serious? Are you serious? Man, this guy's literally cursing at the CEO. Honestly, that should be an indicator. Whenever people start cursing at the CEO, it should be called the curse indicator, right? That's like a buy signal, right? In any case, right? Obviously not financial advice, but I'm just saying, this is kind of funny. All right, so let's go back now to calculating medical cost ratio using Excel. So I'm going to go ahead and use the documents that I have from Clover, right? And let's go ahead and just kind of put this into perspective. So Q3 2025 in comparison to Q3 2024. We're going to go ahead and take a look at net medical can't speak. Computer's slowing down. Net medical claims incurred. We're going to go ahead and take a look at those. We're going to look at total revenues. Then we're going to look at MCR. And we'll do the calculation, okay? So first we'll do last year's, okay? So if we take last year's numbers, which is hold on. 249. So because I'm looking at the like the paper from the Clover, right? From their earnings. So if you look at that, it's 249 here. And then if we look at the total revenue was 330. Okay. Just so people can see what I'm doing here, because this is an educational platform. This is better than a financial book, right? This is like just use real companies to just teach financial concepts, right? All education, not financial advice, right? So you can see here, 330 is the total revenues, and we're taking this number here divided by this. That's it, right? That's it. So we're gonna do that. We're gonna say equals. We're gonna take this number here divided by this, okay? And we get this, and we're gonna turn this into a percent. So and we're just gonna add some decimals here, can we? Oopsies. There. So 75% MCR, okay? Now remember, Clover needs to have, I think, above 80% or above 85%. I forget which one, but they need to have above 80%, okay? On a 3-year cumulative basis. So it's actually in their best interest that they're higher this year. It actually works out for them, right? What's going on? What's going on, right? So now, what is the MCR? Because everyone's saying the cost ratios are over 90%. They're like crying. They're like, they're like, it's hilarious. Cry me a river. I smell blood, right? I give me your meat, right? I want it, sell, right? I'm speaking generally, right? I love that. I love that fear, right? Give me my American dream, right? I want you to buy high, sell low, and let me eat you up, right? That's Wall Street. You understand me? That's nasty, right? But it's okay. Get back, W-2, while you can still do it before the robots take your job, right? All right. Kind of vulgar, isn't it, right? But that's life. What did Rocky say, right? There, it's you think life is sunshine and rainbows? It's a mean and nasty place. All right. So now let's go ahead and look at net. Now let's look at this year. So net claims is 423 million, and then total revenues this year is this one. So now let's go ahead and let's take. Oh, what am I doing here? Whoopsies. Sorry. Equals this divided by this. And then we're going to go ahead and turn it into a percentage, and we're going to add some, we're going to turn it into a percentage. There it is. So now we're going to look at the net change. Net change. So we're going to take equals this subtracted from this. So the medical cost ratio increased by 9.8%. It increased by 9.8%. But retail is so stupid that they cannot do math. They're stupid. And now let me unstupid you. Let me take the stupid out of your head. Let me unstupid you. Okay? Let me take the low IQ part of your DNA, right? And let me teach you something. Okay? You go here now, and you go to the report, and you go down here. They gave a data point, right? And this data point, they cannot listen. This is an SEC statement. They cannot lie about their company. They lie about their company, then this is a big deal. Okay? They give a statement here. It says, despite these pressures, our underlying incurred medical cost trend, excluding pharmacy, was 4%, while growing membership 35% year over year. I'm going to repeat it again, then I'll translate. Despite these pressures, our underlying incurred medical cost trend, excluding pharmacy, was 4%, while growing membership 35% year over year. What does that mean? That means if you remove pharmacy, their medical cost only went up 4%. So now, let's make another one called isolation. Isolation is 4%. Okay? So what does that mean? What is the net? So what is pharmacy then? What is pharmacy? Equals 9.8, which is the net change of medical cost, subtracted from the 4%. Pharmacy cost them 5.8%. You understand? Pharmacy eats shit, right? And then this is spoken from a pharmacist. Master the Chin is a pharmacist. We lose so much money, right? I know, it's so true. Okay? So now are you starting to see now we are going under the hood? Because that's the problem. It's not you that's stupid. It's your educational system that effed you over. It's your governors and it's the elites that designed a school system that does not help you how to think. That is the issue. No, it's not you that's stupid. It's our country that's stupid, that does not invest in its citizens. That's who's really stupid, right? Okay, so now. Okay. So now that we went ahead and basically broke this down, and I feel bad for Peter. Like, Peter, if I was you, Peter, break it down. Peter, break it down, Peter. These people don't understand, but it's okay. Maybe it's good because then, more institutions come in. I get it, it's okay. But, break it down. But it's not your job. It's not your freaking job. You know what I mean? And then this is the poor guy, man. I feel bad. The guy says it. Guy posts again today. He said, despite increased utilization, he's like, I'm sorry, guys, but excluding pharmacy for our entire population remains strong with 4% increase year over year. He's trying to tell you. You know what I mean? So now I wasn't going to do this, but let's go deeper. Let's go deeper. So let's go to whatever the hell, I can't even spell Clover. Right? Google fixes it. Let's go here and let's go back to Q4 2024. Let's go back to their original guidance. Let's go back to their original guidance. So their original guidance was 87 to 88%. That was their original guidance. Can we just say, let's take the halfway point? I don't know. Let's take the halfway point, 87 point. Or let's take the low and the high, 87. And now I want us to compare it with their guidance now, right? When we're 3/4 in. Let's go to our guidance now, 90 to 91. So now let's take 90, subtract from 87. So 90 minus 87 is 3%. So let's see. 90 minus, hold on, 87 is 90 minus 87. Okay. And then obviously there'll be the same number. 91 minus 88, 3%. So what they calculated originally from the increase was 3%. So they changed it by 3%, not by the pharmacy, which is almost 6%. So that tells me that they just, were off by 3%. That's it. Not by 5.8%. So that tells me that they put in a buffer anticipating that pharmacy and the growth may hurt them, but they obviously undershot. But it tells me how defensive they are, because if they would have risen, if they would have went from, let's say, 87 to like 93%, then I would have said, okay, that makes sense. That makes sense. Because of, but they're still guiding for that. But again, we're not telling the whole story here. So they originally guided about 88%, or sorry, 87. But what was the BER for this quarter? The BER was 93.5%. So if we take 93.5 subtracted from 87, you get 6.5. That is a 6.5 jump from their lower end, or from their higher end, a 5.5%. Right? So this quarter, that extra 5.5% jump over their original guidance is equivalent to this 5.8% from pharmacy. Pharmacy is what's kicking their ass. Okay? So how are we going to fix it? How is pharmacy going to get fixed? Okay, well, we could say the 4-star rating is going to help them. That's 5%. That helps. But no, we're not going to use that tailwind. No, we're not. We're going to actually go ahead and use something else. Let's go ahead and I was going to make this video yesterday and go deep, but the problem is I was busy. I had Zoom meetings and I just finished a Zoom meeting. It's a lot of crap, guys, right? But I'm here now. Let's go ahead and just kind of like go through this. All right. So, and this is a live. This is not like, I'm not reading off of a script. The camera's right here. This is like, I'm not reading off of shit, right? So you guys can see this is like, off of the cuff, right? So, all right, so let's see, where are we here? Oh, there it is. Financial outlook. Okay. Guess what? Full year gap profitability. So they're going to be profitable next year. And then retail investors, they're like crying. Are you kidding me? They're like literally crying. It's like freaking babies, man. Seriously. You know that like that comedian, be a man, right? Jesus. All right, now look here. Increased Part D subsidy. That's what's going to help them. That's what's going to help them. Let me just shift this here so I don't have to shift multiple times. That's what's going to solve the issue here. So there it is. This issue here is going to be solved. I'm going to put a green by this. So that solves the issue. Increased Part D subsidy. You know what that means? The government's going to give them more money to offset this increase for pharmacy. And they're still going to work on it to drop it lower so that extra money goes to them rather than pharmacy, right? So there's that. Okay. So now that we attacked pharmacy, the isolation is 4%. So what is their true MCR? What is their true MCR? Their true MCR is going to be 4%, right? Is the increase. So their true MCR is going to be 85.27 subtracted from from here. So their true MCR is 79.46%. And these analysts, they're calculating it. They're doing this under the radar. The analysts are doing this. This is, guys, watch the institutional ownership fly. Watch, just watch. Okay? They hate people like me, but I want you to win. I want you to learn how to do this. Their true MCR is up by 79.46% from 75.46%. So if you were to take the difference between their true MCR subtracted from last year's MCR, what do you get? You get 4. You get 4%. Where the hell did that come from? My butt? No, it came from this line. Despite these pressures, our underlying incurred medical cost trend, excluding pharmacy, was 4%. That's where it came from. You understand? Do you understand? So we could go ahead and remove this now. We understand. Okay. So then now we understand that this could be eliminated. So we can get back to 79.49. Say, okay, that's good. So it might help. It may not eliminate it. I don't know, right? We'll see. So now let's just talk about, let's put this green line and say extra money for 2026. I don't know. Let's call it that. Okay. So rate notice. CMS rate notice. 9%. You don't know it? Go do your research. It's 9% on average, right? 4-star rating, an extra 5%, right? Watch this. Are you ready? We're gonna cook. Okay, are you ready for this? 20. This is on average, right? We don't know because not all of them went through Counterpart. Okay. Now, someone here, damn, breaking it down like intro, method, results, discussion type scene. Now you understand why I did why Mayo hired me to do research for them for a year in a brain computer interface. Are you starting to get it now or no? Okay. All right. Now 2025 now. Okay. So watch this, right? Watch this. Ready? 2025 year patient, 2025 patient cohort. 2025 patient cohort. This is this year's cohort aging into next year's. And then how much do they where the hell is it? How much do they decrease by year 2? What does that say? 700 basis points. You know what that means? It means 7%. Okay? You don't believe me? Watch this. 700, yes. Because sometimes people just don't believe. I get it, you know. What does 700 basis what does 700 basis points mean in percent? Just so people can see, because like I don't believe. Okay, let's see. Let's show you the calculation. See, 7%. Okay, you got. We're on the same page now. Right there it is, right here. 7%. Okay. All right. Okay. So now that's year 2. 700 basis points. So the 2025 cohort is going to give us an extra 7%. But wait a minute. What about the 2024 patient cohort? What is that going to give us? What is the patient? Remember, year 2 is 1,400 basis points, which is another 700 basis points. So what is that going to give us? Right? It's not 800. They changed it to 700 for some reason. I think they just dropped it down. I don't know why. Pharmacy, I don't know. They just dropped it down. It's okay. We'll take this for 700. All right, 7%. That's another 7%. That's another 7%. And then we have pharmacy subsidies. Now, it said that that's going to help. It's 5.8%. Let's just be humble. And let's say 5.8 divided by 2. Let's say it's not all of it. It's 2.9. Let's say it's 3%. 3% for the subsidies. So now we're going to look at total money. Total money. Total money percent. We just take this, sum, select it all, close, 31% in savings for next year. Holy crap. That's a lot. ADI, I'm not that good into it, so I don't know, but understand it can only get better, right? So we're just keep, because I'm not an expert in that one, so we're just gonna keep it like this, to be fair, right? It'll adjust for any issues for the calculation. Okay. All right. So now this is going to be annoying for me, but it's okay. So what I'm going to do now is I'm going to basically go ahead and I'm going to use the Al Stock Trades terminal to go ahead and back calculate all these revenues. Okay. So to do that, we're going to open up something here. We're going to say, oh, Lord. Okay, so let me think. Let me think how I need to do this. So in 2023, they made this much in revenue. Okay, this is in millions. In 2024, they made this much in revenue. So the difference is this subtract from this is 110 million. So 110 million is your patient cohort for 2024. So that's 110. Oh, hello. So if we take 110.59, we'll say this as savings. If we take this and multiply it by this, we're going to save another 7.74 million from that patient differential cohort, another 700 basis points. And we're going to probably save another 700 basis points from other cohorts of the past, but I'm just not going to do that. But you're starting to see how it gets complicated, because what we're basically seeing here is called a flywheel business model, which is very difficult. Okay. Yes. Year one is 0, right? We're not including, this is for 2026, right? We're including this year's cohort for next year's calculation, and we're including last year's cohort for next year's calculation, which is why it's 7%. Does that make sense? Read it a couple times and you'll get it. Okay. All right. Now, so here's that. So this is 110. So now let's go ahead and talk about the 4-star rating. Now, again, it's very difficult to do the 4-star rating for next year. We can, because they're going to make more money, but let's just assume they're going to lose some money. We can calculate the MCR and keeping it around 79 or 70. Let's go, 83 to 85. But we're just going to just back calculate for this year, just kind of assume, and then we'll do that, right? So what I mean by that is we're going to go ahead and we're going to take the expected revenue that they're going to make on the lower end, which is 1.85 billion. So we're going to say 1850. Okay. Well, actually, what I want to do is I want to, so I'm going to take 2025 revenue, which is the expected 1850. But then I want to go ahead, I want to pull out the 110 million to normalize the savings. So to do that, we're going to go ahead and say, we're just going to have this on the side here, normalize. And this just, for people, the math people will understand, just to make it a little bit more accurate. So if we take this and subtract it from this number, we get 1.7 billion. So then we could just use the 5-star rating on this 1739.41, which is technically I'm undervaluing it, which is I like to always do. So we do this here. Oh, I forgot to put equals 86 million in savings. Okay. Then we have the star ratings, right? So technically we could, save for all that, but that's fine. We'll just say equals 1739.41 times 0.09, another 156. Okay. So there's that. Then you have the 2025 patient cohort, which is you take this number, subtract from this number. So we'll do the 2025 differential. So we'll take equals this subtracted from this, which is the 478 million. So that's pretty much goes here. That's this year's cohort saving 700 basis points for next year. So that's 478.87 multiplied by 7%. My apologies. I forgot to put equals again. Easy fix. That's 33 million. And then part D, we could then go ahead and say equals 1739.41 multiplied by 0.03. That's 52 million. And then we can go ahead and say total money now equals the sum, which is this, of taking all this, which gives you $439 million of savings. And then you have stock-based compensation, which is going to be cut. We're not even including that in the calculation. You understand what I'm saying? Okay. So then now you have this is in millions, okay? So now that we have that, and we can obviously go ahead and back calculate, look at 2026 revenue and look at what analysts think, but we're just going to do this. Okay, so there's that. I'm thinking. Hold on. Oh, we're not even talking about SaaS, by the way. There's also that too. Hold on. So if we were to take this and assume, I don't believe in this, but let's assume all that goes to profitability. If we do that, and let's say we have a price to sales of 60, wait, hold on. Sorry. Divide by 510 million shares with the price of sales of 60, that's $51. That's like insane, right? I would say, and that's price sales of 60s from UBS. Let's assume we'll take half of it and do a price of sales of sorry. Go ahead here. Divide by 510. Price sales of 60. That's about $25. But let's do the reality. Let's say shit world. Shit world is just crap. So we're going to take a 75% margin of safety cut. So if we do that, we say equals this multiplied by 7.5, and we get nothing. What the hell is that? So this multiplied by 0.75, which is technically, my apologies, 25%. Sorry. I'm not hitting multiply. That's why. So that means we're assuming 109 million in like a shit world, right? So based off of that, we could get 27 mil per quarter, which is insane, right? But that looks like this might be your future EBITDA, right? Now, how much of that will be adjusted net income or net income, I'm not too sure. But if that's the case, and if we take 109 divided by 510 and we multiply that by 60, we're talking about 12.82 stock price. Now, let's go to So that's actually incorrect. They're already giving it now. They're already giving it now. There was a document that was by UBS, and that's what they're evaluating it today, which is insane. Which is insane. This is not. This is price to earnings. This is not price to sales. Price to earnings. If you look at Oscar, when Oscar was profitable, its price to earnings was 50, like 48 to 50. Now it's unprofitable. You can't see its price to earnings. But historically, Oscar's price to earnings was actually 50. Look it up, okay? I'm not doing price to sales. I'm doing price to earnings, okay? Two different things. All right, now let's go to the mastering, and now let's and then just forget the evaluation right now. Forget all that. I'm looking at what could be the profitability here. So there's a reason why they're confident in saying full year GAAP net income 2026. They're pretty much saying it. They're like, hey, listen, we have this up our sleeves, right? All these calculations are not including CA because how can I include CA? I don't really have a lot of numbers, just that other income, right? So I'm not using it, right? Old school PE, exactly. All right, so let's go ahead and go here, and then now let's go to let me think. Let's go to our quantum software terminal. Let's go to Clove. You can see here on the hour chart, as support and resistance, you can see like different types of Fibonacci's. You can see it hit right on that. You can see here it hit right on that Fibonacci. Right on that Fibonacci, right? You can see how powerful this is. Again, all part included lifetime access. We just like shove up everything in there, high quality stuff, pretty cool stuff. All right, so let's look at analyst estimates. Now, analyst estimates, they're saying that they're going to be profitable in 2026. In 2026 here, they're saying they're going to have $20 million, $20.9 million in profitability. Okay. That's pretty good. But watch this. They show their hand. Then they say 67 million. And then they say 94 million, right? I think this is undervaluing them as they get older. I think they're going to get more, right? It's just the growth rates is what's basically throwing them off right now. And this flywheel this is what the Clover's pretty much effectively saving 7% off of like 33 million. Sorry, 77%, which is they're getting an extra 33 million, and then they're getting an extra 110 million every year based off of the growth rates because of that 7% reduction. So they're effectively getting 14%, which is insane, right? So I know it's hard. I can like draw it in the flywheel model, but that's just I don't have time for that, right? This should be enough, right? So just to kind of show you. So that's why I'm very confident and I'm actually really bullish, right? Because even with this pharmacy, by extrapolating, the true MCR is actually 79.46, which is pretty good, right? So what does that mean for EPS? Well, EPS will go down here. You could see like 4 cents, 13 cents, and then you have, 19 cents. And then here your analyst, right? Only one analyst and whatnot. But I think, this analyst is correct. They are going to be profitable in 2026. But I think they're going to have more money than 20 million. But we'll see. Who knows? I think next year is going to be very great once they're profitable. It is going to be very, very great. Very, 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 very good. Now, let me explain the reasoning here. So if I just kind of move this here, and if I just kind of show you, if I show you Palantir right now, when did Palantir become profitable? It became profitable in 2023. Okay. So what happened to Palantir in 2023? That's when like Kathy Wood bought. You got so many tailwinds, right? Let me show you what happened in 2023. 2023 was here. right? So something happened. Once they started to release profitability in 2023, they shot up. You see that shot, you see them shooting up. That's when Kathy Wood bought, right? Kathy Wood bought around that time, and then you just saw an increase in volume. There was an uptick in volume. We're talking on the daily, we're talking about 233 million to 150 million volume coming in, right? And then the free cash flow machine just basically kicked up. Okay. So hopefully that makes sense. Regards to that, let me go put this here. But yeah, honestly, this is all really what I wanted to say. Hopefully this makes sense. You could see the true MCR is actually 79.46, excluding pharmacy, and their patient cohort, it's aging into it. They're going to get another 7% reduction. Now the argument is, what happens if there's going to be increased utilization? Well, I think they're going to grow into those other private markets. Here's my expectation. Yes, 2026 is going to be profitable, but it's not going to be as much profitable as what they wanted, probably. The 3.5 star degradation in 2027 is most likely, per Andrew Toy's kind of like not clear to somewhat clear PR release, says that essentially Counterpart is going to be able to save them. They're going to essentially, so we can back calculate this. If we were to basically say the 4-star rating off of this year is 86 million, right? Now, if they grow, that's 86 million, right? So if, let's say, they like double their revenue next year, whatever, like Counterpart is going to make them anywhere between 86 to like 150 million. And if you think that like that's baloney, well, if you look at other income right now, it's like at 17 million, and they're just getting started. Let's say 9 million, right? So I think that's kind of, what they are, right? And so they are reporting it. I recommend watching the video. Again, you see how the retail investors, they just, right? But again, it's fine. It is my alpha, I guess, right? But anyway, so you see this here. This is kind of like what I was doing in my head as I was listening to the earnings call. I was like, oh, this is good. This is really good. While everyone was crying, I'm like, this is really bullish. Now, let me explain to you kind of why. So 2020, so I told you 2024 was the year of proof of concept. If you don't recall, go back to 2023 videos. You'll see 2024 was the proof of concept. We went from 60 cents to $4.80, right? We ballooned up. The proof of concept was there. Free cash flow, all that good stuff, right? This year is the transfer to institutions. This year is the year that the retail investors basically paper hand to institutional investors, hence why we're above 40%. And people are basically cursing and cursing. You can see the anger to Andrew. It's even more than it was when it was at 60 cents, right? They're like angry. These people are angry. It's almost like they're more angry than because imagine Palantir's up, Hims is up, SoFi. So they're like really angry, right? What's worse than a stock's down when other stocks are up? So they're like going to sell, right? So institutions this year are basically accumulating. They're buying. They're just basically, it's like taking candy from a baby, okay? Next year, it's gonna get interesting. So now it's kind of hard for me to do this, but like, what is going to be their growth rate? They said it's going to stay the same. So what is the growth rate here? 39%. Kind of hard for me to look at, but yeah, I'm comfortable doing 30%. I'm comfortable with that. Yeah, that's fine. So let's open this up. Let's go to the software. Let's go to advanced intrinsic value calculation. Let's go to CLOV. So we're going to take 1850 times 5%. We're doing the 5%. That's 92.5. We're going to do 30%. Sorry, 30% growth rate. There it is. Recession is $4. Bear is 8. Base is 11 and best is 17. So let me just kind of go off of this right now here. Or actually 92.5. Let's just do 37 plus 9, 46 divided by 2, which is 23. We'll call it like this. And then we'll do 350 times 0.05, 67. That's fine. We'll do this like that. So the CLOV stock went as high as the base case based off of this calculation. Around the base case, we can say right between that. So that means if they do 30%, sorry, if they do 30%, yeah. So that means next year, 2026, I would be surprised if Clover is trading under $4. I would be very surprised. I would be surprised if Clover's trading under $4. In fact, we may even balloon next to $8 next year, depending on how good they do. Again, not financial advice. It's just what I'm thinking, right? This depends. If there's going to be more inpatient, outpatient expenses, if they're still unprofitable, if they can't basically showcase their profitability, if it's pretty much opposite of all this and all this money doesn't give to them, then of course we're not reaching this, right? Of course, if they're not giving the free cash flow, it's input equals output. If the inputs are not true, the output is not going to be true, right? Don't be stupid. Don't be a retarded, peanut, brain, right? If the inputs are not met, the outputs are not going to be true, okay? So that's my interpretation of what the outputs could be. So yeah. And then this is not including SaaS. So this is like a crazy. This is like crazy. I mean, I can only imagine what this could be. Oh man. Wow. Then you have Blaine coming in and all these things. So overall, this is great. It's about 40% ownership right now. Who knows? Probably even more. I would say, and it falls right in line to the market sentiment intelligence. It really falls in line right in there. After all these retail investors sell, I think once we get to 60% ownership in institutional investors, I think the float's going to be so small that you got 60%, you got Vivek owning a lot. Then you have, you're going to have some retail investors that are like solid. That 10% of retail investors are going to be like, I'm holding forever. Then, the other ones are just going to basically call themselves out of their existence. And I think that's how, there you have it. Right. So. So there it is right there. So there it is. Yeah, man. I mean, if you're furious, I mean, for me, 8.6, how much money would I have? I'm curious. Oops. I would have 3.7 million. That's actually pretty good, man. Right? For me, right? That's good money, right? And then I'm holding longer, right? So again, my expectation is this. I'm waiting until the end of 2029 or the middle of 2029 to expect some major fruit from this. And again, imagine how many retail investors are going to sell by then. Because again, I'm going to show this one time and then that's it. It's kind of like pointless to, but if you look at Nvidia is the most valuable company right now. How many years was it trading near the zero here? It looks like literally more than 15 years. It was trading at nothing. 2006, 2010. Okay, literally near like all dollar, nothing, like literally nothing. These are all pre-adjusted splits, right? But you could see nothing. So just imagine how many people sold here, how many idiots sold here. Take this screenshot and copy paste it to Clover. There's going to be all these idiots that are going to sell because they don't have everyone wants a dopamine hit right now, right? Everybody wants to make money today. We already talked to you guys about this. As a doctor, I can make anywhere between 500,000 to, let's say, maybe 1.4 million, maybe 2, right? But how long does it take? It takes 17 years to become a doctor. Do people have 17? You really want to wait 17 years? People don't want to do that. They want it right now. Right? So then so then people go ahead and people say, well, what about this stock? What about that stock? Okay, what about Palantir? Right? Well, Palantir was actually founded in 2003. It was founded in 2003, guys. Just imagine that. Not making money for this guy until literally 03. Holy crap, right? So that's what it takes. Clover was founded, 2014. It took them like literally 10 years just to build out the data. And now this next phase is, the next, 5 years off of 2024 is going to be 2029. And that's going to be where we're going to start seeing some fruit, right? So there it is, right? And there's going to be a lot of retail investors that pretty much sell. And it is what it is. I mean, again, they can do what they want, right? I mean, that's But I'm happy. I'm very bullish. I'm expecting Q4 to be a lot lower. Oh yeah, one more thing. A lot of people are saying we want to hear about SaaS now. Well, let me show you something. Let's go back to the software. I use my own software, right? Earnings transcript terminal. CLOV. I think, was it in the beginning of the year? Yeah, I think it's the beginning. Let's see. Oh, here it is. Let me just read it to make sure this is the right line. Okay, and then we didn't much on counterpart here. Just take color on how the go-to-market strategy is progressing. If there's any more data, we just kind of as we look ahead, when we start seeing contribution. Thanks. Got it. Andrew Toy. Yes. Hey, Jonathan. It's Andrew. Yes, definitely. We remain excited about the counterpart business, and we're looking to provide more updates on that as we roll out throughout the year. We remind everybody that we're not necessarily intending to make announcements about every single deal we make around there. However, we remain excited about it. All contributions, revenue, etc. We'll of course be in consolidated financials as well, and we're going to be talking more about that as we proceed in the quarter. But right now, we're very focused on making sure that we improve profitability in the insurance segment. Got it. Okay, so here it is. So Jonathan Young asked him. He said, "Okay," and then we didn't hear much about Counterpart. This was back in Q1 2025. So we didn't hear much about Counterpart Health here. Just any color on how that go-to-market strategy is progressing. If there's been any more bigger wins, kind of as we look ahead. When can we start seeing contributions? Thanks. So Andrew Toy said, hey, Jonathan, it's Andrew. This is Andrew Toy, right? CEO. Yes, definitely. We remain excited about the Counterpart business, and we are looking to provide more updates on that as we grow up throughout the year. We remind everybody that we are not necessarily intending to make announcements about every single deal that we make around there. However, we remain excited about it. All contributions, revenue, all that stuff will be in the consolidated financials as well, aka other income, right? But most retail investors don't know. They just don't listen. Which is why we have the terminal to you just press it and it goes ahead and reads it for you. Watch it.
And we're going to be talking more about that as we proceed in the quarter. But right now, we are very focused on making sure that we improve.
Let me pause it. Isn't that cool? You have your own little reader in the all part of Al Stock Trades. Pretty cool, huh? I programmed this by myself. All right, let me see here. So now watch this. Ready? So in the consolidated financials as well. So watch this. And we're going to be talking more about that as we proceed in the quarter. But right now, we're very focused on making sure that we improve profitability in the insurance segment. So here's my speculation. I think that Andrew Toy wants the insurance company to be profitable. And once it's profitable, then they're going to be talking about Clover Health, Counterpart assistance revenues, and all this other stuff. Now, what does that look like? Is it going to be once they achieve full year when they in 2026? Could it be like so Q4 2025? They can talk about it. I don't think so. I welcome it, but honestly, I think that it's probably going to be 2027. They're going to talk about it, right? Most definitely 2028, but definitely I would say by 2027. And if retail investors, what they're going to do every quarter, you're going to have retail investors that get hyped and that sell. Like I'm done with this. They don't know. They don't talk about counterpart. I'm selling. Then they wait for the next quarter, right? And then they sell after that. And then you're gonna have like 1 to 2% sell. And who's gonna buy? Institutions, right? So there it is. Okay, so that's about it. I think I hit everything I wanted to talk about. Let me look at all these other tabs I have. Now we talked about this. Yeah, we talked about this. Yep. Yeah, 40%. Oh my God. Quit trying to pump this garbage company, yada, yada, yada. And again, look at their comments. Dude, I own $1 million of this company. I'm not pumping anything. I'm explaining my due diligence. You don't have to watch. In fact, take what I say as shit. That's all, right? Take what I say as poo-poo, right? Why are you here, right? But again, guess what? For years, now finally sold off earlier this month. There it is. He sold off. He's gone. He's gone with the wind. That's one retail investor. I said, bye-bye. Fly, my friend, fly, right? Fly to your W2 life. Fly, my friend, fly. Fly to your American nightmare, right? While I am going to go to the, American dream, okay? So anywho, poor guy, dude. He's going to, he honestly, man, you are what you preach. He's going to look like this. He's going to look like a skeleton in the next 10 years once he sees this flywheel model. He's going to look like this, actually. He's going to look like this. Oh man, it's going to be funny. Right? All right, guys, let's see what else. Did I talk about? Oh yeah, retail. Come on, yeah. Let them do what they do. Okay? So who was buying? If they were selling, who was buying? Doesn't make sense. Okay? All right. Tahini is the most salty. That is hilarious. Hey, be careful, GP. Be careful. Maybe YouTube might put you as spam. Right? You're the spam bot now, right? Freaking Twitter. The only nice comment to Andrew Toy, right? They're probably spam. Like the jokes write themselves, I swear. All right, guys. I appreciate you all. Thank you for hopping in. And I know, man, I'm really sorry. I love you, man. What's going on? I will take this pain to make the rest of my life a vacation. Yeah, it's either you work hard now or yeah, there's like a saying about that. But yeah, that's it. That's all I have. Appreciate you guys. And yeah, we'll use this as the last image. Okay. And yeah, I definitely need to. Haven't done it yet. It's an hour. I gotta go. Yeah, dude, it's 9:00. I have to wake up early tomorrow. Again, as you guys know, I'm going to become a doctor, so got to focus on that. Just wanted to go ahead and give a post earnings analysis. There are really not much videos to make. Honestly, I think this video is sufficient, but that's it. But yeah, I'm not gonna do it. It's too late, right? I've been on here for 1 hour and 21 minutes. So if you're in our platform, go ahead and you can do the due diligence. Appreciate you guys. Appreciate you all. Right. And that's it, guys. Right. That's all I have for you. And I'll see you on the next one.